Hi guys, good evening. Hi Shuk. Open. Hi Jeremy. Hi Sridhar. Hi Shri. So tomorrow, today was like a massive day in terms of all the big 6, 7 companies. They took a backseat, and AVGO, AVGO run like there's no tomorrow. AVGO, AMD, MDB, they just ran nonstop. But let's see. I think they were all pushed higher today by a surprise Nasdaq rebalancing. So all the big tech took a backseat, and all the small cap, mid cap, they took advantage of it, and the money flowed into them, and that resulted into a massive rally in some of the stocks. AVGO, we went like for the breakout on Friday, and it continued on and on. And end of the day, Oracle, I made a bust in Oracle. I don't know why I play earnings. Till the moment I'm not playing earnings, I'm doing good. The day I play earnings, I am messed up. In between, hi Manjunath, hi Kulwant, Sasrikal, hi Vishal, hi AC, hi Satya, hi Ray. So guys, tomorrow is a very important day, which is a CPI day. Market, if we look in terms of levels, I'll go to ES. And it's right at a very big regression line. It's almost there. Like if I convert this into a normal Heikin to a normal candle, you will see that right at the top we are just testing this line. Okay, and this is a little uh, I would say a little risky because we have a gap. We are well away from like from 4100 20-ish. We just went in one way, and now we are consolidating. And if we again, let me go back to the future of December Z23. So this is a massive supply area. Like you saw that big resistance trend line. That's a good resistance. We are still in a very tight range. If we can clear 4650, we could actually see a massive move on index. Otherwise, we might come down towards 4500. This, because like look at the DMI, there's hardly anything on the negative side. Positive side, the strength is enormous, but now even the positive factor is cooling off, which clearly shows that yes, there is a lot of buying which is happening, but if it starts to flicker in a opposite direction, it may trigger some aggressive selling on the downside. Let's also look at the book map. Book map is a little slow. We will talk about all the CPI. I'm not going to do individual tickers today. We'll talk about the CPI, the possibility of CPI, and its possible moves. I don't know why it's like loading very slow today. This is bookmap. So if you see on this bookmap right now, I'm taking a 15-minute time slot. You see 4690, 4685. That's kind of the regression channel area. It's showing some aggressive sellers are there. Same on the downside, you will see that there is substantial buying which is happening around 4680. So this will shift a lot in the morning when the numbers will be out at 8:30. So you need to be cognizant of the fact that we are almost at 52-week high, or not all-time high, but 52-week high. We are near the long-term regression channel. Like, people who do not know, this is the long-term regression channel line, the red line. We are there. We have gap. We are well away from the EMAs. We were consolidating right there, but then the change of future happens, and this gap for the future exists. Now, in order to have something strong, I think this future gap needs to be covered or filled. If we fill this gap, that will be really good. It will also bring a meaningful 1%, 2% correction on the index, which will be healthy correction and which will provide some good recoil for the market to cross 4700 at the year end. 4700, 4720. But if we try to go higher here with less power, then things may not work out as they're supposed to. So I'll be a little cautious. I would be happy if we get a gap fill and then we continue our upward journey. If we start from the upward journey, then the risk will be a little higher as compared to what we see. Plus, we have Fed meeting on Wednesday, and you need to be careful that if let me just go back to white screen so that we can talk about the CPI and the factors. So people who do not know what CPI is, this is the definition for a CPI. We are talking about November. So this is a comparison or a relative CPI year on year. So what was the CPI in the last year compared to this? What is a change in the price from the perspective of a consumer? Like, supposedly you were buying a book, which was $10. Now it's $10.30. So there's an expectation that yes, there is a 3% inflation to that CPI. Now we have seen some incredible retracement from this CPI. Starting from 2021, we had some massive bullish move into the inflation, reached all the way to 9%, but now it's dragging down and kind of holding a base 3. Now, expectation is that it may be around 3 to 3.1. 3 to 3.1. Last time it was 3.2, which was a little like 10 basis points lower than what was expected. This time expectation is further lower because the prices of the crude has gone down substantially in the month of November. That would have reasonable effect. Also, the interest rates have gone down in November. As a result, the rentals should be a little off as compared to what they were. And if you go down into the details, like, let me open Paint, the components for CPI. Let me open that page for the components and then we'll see. CPI components 2023. Let's use generative AI to find. So these are the indexed weight from BLS. Housing is 0.4, furniture is 0.5, health is 0.6, apparel, these are weighted, but it's not a complete list. What are the major components? Yep, these are food and beverages, housing, apparel, transportation, uh, medical, recreation, education, and other goods and services. Now, if I copy them, okay, put them here. Now, if you see, the rents have a little downish move, which is one of the biggest component. Transportation, the prices of the old cars, the selling of the old cars, it's like if you see Tesla prices are always going down. But if you see other cars, they are not going down anymore. So it's kind of neutral. Medical care cost have been normal. Like people are traveling a lot during this. So the recreation has gone up. Education and communication will be same. Food and beverages little higher, not like food has gone a little higher, but not much. Apparel has definitely got higher. Now, if you constitute them, right, it comes out to be a little 3.1 or 3.2. I don't see it is uh, higher than 3.2. I don't see we're going to have higher than 3.2. So if it is not higher than 3.2, then inflation is getting stagnated. Yes, we still have higher unemployment number, higher employment numbers. Yes, job growth is high. Yes, wage inflation is higher. Yes, if I am Fed, I see inflation is coming down, employment is still higher, job growth is still higher, GDP is still higher. Do I have one more hike left in me? I can move the interest rates higher. I think so. Or I am not going to cut the rates. Expectation is Q3, we will have some rate cuts. But depending on the language, I think it may be until the end of Q4. Right now, market has assumed we are going to have Q3 rate cuts, and as a result, they are just thumping and going higher. But I don't see that's happening at all because higher for longer is the theme which Jerome Powell is taking into consideration, and Fed is always lead with respect to the economic conditions because the data is laggard. It's not current. So all these things telling me that even if the CPI is 3.1, we may not have a big move. The big move will come from the FOMC conference. So I'm a little inclined to not trade futures tomorrow. I'm not inclined to trade at all, like in the initial 10-20 minutes of the market, because everyone is expecting CPI to be a market mover because we are in a very tight range. But I doubt that. I think we'll have the bigger move on the FMCG at 2 p.m. Wednesday, not today or like not tomorrow. So I would like, if I go back to my, let me just clear this. Go back to my sheet. I think I would like to spend one more day here around this thing, holding 4668. If I do that, that will give me some confidence that yes, even after this gap on the future, we are holding higher. And if that's the case, I'm looking at 4778. That's the area where I'm eyeing on the year end if we hold it here. But if we retrace, I think that will be really, really good, healthy correction which market needs at this moment. And then we can continue the journey. So I have like if I put my perspective, I think CPI, let me just write this instead of annotating it. Let me just write this. So if CPI comes to be 3.1, okay, then I expect futures ESF to hold 4668 and remain in range until FMC between 4668 and high at 4690. So it continues to remain until FOMC. If CPI is 3.1 or 3.2 or higher, then ES should break below 4668. And again, I'm talking about the futures for March 2024 and test the gap. And then that value should be 4600, 4620, 4595. If it is higher, if CPI is less than 3.1, market may not like it because it is showing weakness or sense of deflation. So for me, I think the market needs 3.1, 3.2. If it doesn't bring or less than 3.1, I think that's a worrisome situation, which is with China, that the buying or the demand has slowed down significantly. So if supply is there and demand is not coming, only then CPI should be less than 3.1. I think it will be the middle case, 3.2. It will not be 3.1 or and market should remain in this range. That's my take. If any one of you has any opinion, I can share the Zoom link. You can come and we can discuss some more scenarios. Let me just share the Zoom link. It's in the chat now on the YouTube. you can join and we can talk about different scenarios which might uh, pop up tomorrow. In between, let's go back and look at the Nasdaq features as well. NQ. NQ features still have some room towards 16,600, wherein you can come and you can test this line. Like both the charts, the red line, which is the negative DMI, is down, or directional index is down, and the positive green line, which is the positive in directional index, is higher, and the ADX, which is the strength, is high. So it is clearly telling me that there's positive strength still in the market, but it is really, really high at this time. Okay, and when things are really high, it becomes a little tricky, right? We have not seen NQ at this high levels in the past few months. All right, so I still believe that yes, we might test it, come back towards 16,000, fill the future gap, and then continue our journey. Because a breakout, this was not a breakout. This was just a gap which was created because of the rollover in the futures. So we are still in that range. If you go back to the March to the December futures, so let's keep an eye. In between, let's also look out at the scans if we have anything. So nothing on the bearish candle patterns. Uh, let's see, 12 crossing 34 on Carmex is there, FTV, Live Nation. No, I don't trade them. But if anybody wants to use, you could use that. In my list, if I look out for 12 crossing 34 on the daily time frame, none. So nothing new is here. Anything which was there previously was there. Inside day, Square, Roblox, Roku, SMCI. I think Roblox is up to something. Roblox is trying its hard to break out. So I'll keep an eye on Roblox and IWM. So nothing significant in terms of scanners as well. Uh, I want to do sheet, but like problem is the levels are so difficult for tomorrow that there will be a lot of movement which is going to happen. And these levels may not be right. That's why I'm not covering them. Today, like AMD was my best shot. It ran almost to 135. I think it will have potential to go more tomorrow. Amazon struggled today. I like it's like fourth or fifth day on Amazon where it is in the range. Ignoring the wick, you will see that 1, 2, 3, 4, 5. We are still in that range. Lower highs for some time during the day, it went down and then bounced. So I'm ignoring. So this is something which no logical or no code can confirm. This is something where we need to figure out whether we want to ignore the wick or we want to keep the wick. All right. I don't see anybody coming to join the Zoom call. So, like, I have time if you want to discuss something else outside of CPI. CPI, just shared my views, so I'm going to copy paste that onto Twitter and will share with you all. But if you have anything else you want to talk, you want to discuss, any questions you have, I have more than a few minutes to talk about that. And tomorrow I am bringing in Gavin. So he's going to give you new option strategies, which you can leverage and make money with less risk. Anybody interested to join, or nobody is, or you're not getting the link? Parth, Oracle call was a mess. I don't know whether it's good to buy or not buy, because market didn't like that. Even if I heard the complete conference call, uh, it was not full of confidence. They were saying that yes, there's enormous demand, but if there's enormous demand, then why the guidance is lower? So that things doesn't bind well. So I'm not interested in Oracle for tomorrow. I'll be more interested in I would say Amazon, because I'm holding it. I'm more interested to see what happens with AMD, because all these stickers, they went high and lost a little bit, and then they came back. AVGO lost like $10-12 and then came back. Coin is looking really interested, and right now the Bitcoin is almost $1,000 up. So I'm more inclined towards these stocks rather than going into Oracle. Oracle was a mistake, so I'll accept it and move on. All right, if nobody is interested to join, then I'm pretty much done. Tomorrow we'll have a full session where we'll be talking about all the tickers, because FOMC is different. We will need levels for FOMC after CPI. So I'll be sharing my trades as I do on my Telegram channel. Adobe Flow will not work, man. I'll So Adobe has 675 calls, and there's a dark pool of 75 million. Then also there is a calendar spread which is happening in Adobe. 675, 670, 920, 700 calls were sold. 632 put was sold. And at 310,000, 632 put was sold. 632 call was sold. So it's more likely losing on both sides. What happened to the bond? Bond lost a bit because the inflation has come down. The possibility of more hikes was reduced, and as a result, uh, that TLT has gone up from 82 to 96 area, and it almost reached 96, and then it's coming down. Now it's actually setting up for inverted head and shoulders. If it comes to this 93 and then starts to break out of this line, then potential inverted head and shoulders is there on TLT. So this clearly shows that yes, the rate cuts are there, but market is already ignoring the fact that the amount of rate hikes is still significant. It's putting a lot of pressure in the longer term. So let's see how the market reacts. I have one person on the Zoom call. Yes, Gopal.
Yes.
Go ahead.
Hey, Naval. So I have, I don't know how to phrase my question. So maybe very primitive one, too. Yes, you touched upon the futures. I don't really understand the futures, but how does it translate to our, the share market for tomorrow, Nasdaq, QQQ, our shares like Tesla, and how does it translate? I
It
mean,
doesn't translate to them like uh, it's like if you go to visualize, right? You will see this is Nasdaq 100.
right,
Now, what I'm talking about is the combination of all these tickers. Today, Microsoft, Nvidia, Google, Meta, Amazon, Apple, Tesla, all were red. But
right,
even then, Nasdaq was flat or green, right?
right.
So individual stocks can behave in whatever manner they can, but index will help you to find a feet in the direction. Like for example, even today you saw the index was holding. So if
Correct.
you compare Microsoft, Nvidia, Google, Meta, they all rallied from their bottoms. They did not end up at the day's low. They came up significantly. Like Nvidia went to 456 and then came all the way to 470. Google went to
Right.
131, Meta went to 320, closed at like 324, 25. Amazon went to 143. They tested their supports and bounds. So when we talk about future, that gives you a direction that yes, the direction is positive. Now individual stocks may follow it or may be late to follow it, but they will come in the line because that's where the index is heading.
Got it. So whatever numbers you drew in your paint, it is pretty much same, or the stocks are like the overall market tend to follow the same,
Yes,
right? Okay.
yes.
Got it. Got it. Thanks.
All right. Thank you for joining in tonight, guys. I'll see you tomorrow, and I will post some. How would I say? Some levels after 8:45, 9 o'clock. Once those numbers are out and the market does its initial moves. So I'll post some levels, but I will not recommend anybody to jump into futures for tomorrow. We are at high. If something comes a little iffy, we have gap. We are well away from our EMAs. We might fill that gap very quickly. So anything which rallied today may give up those points very quickly. Okay. So be careful. We'll see what happens at 9:30 or 9:45, and then we'll take a cognizant approach to take trades. All right. So take care. Thanks for joining in tonight. I'll see you tomorrow, and I'll also bring in Gavin. And I'm also trying to work with a company called Earning Whispers. So they're going to show you how you can get all the earning related information. So let me see if I can bring them in this week, so that you can also have some ideas how to see, understand the EPS, what it means, all of that. All right. Thank you for